So that is how today ended up playing out. And now, as we head into tomorrow, the main question is going to be whether there's any kind of follow through. Because in my experience, we have to take the movement on Fed Day with a grain of salt. And I think that now, in order to get that bullish confirmation on the larger time frame, we would need to see a successful breakout above 42.99 to 43.03 half. So that means not just a poke above that area, but a break and hold above that area would be needed in order to get a bullish confirmation. So now, as we head into tomorrow, our intermediate time frame bias could be neutral since we're stuck in a balance area now, and our short-term bias, given the strength of the move today, could be neutral bullish. But we'll see how the overnight plays out, because now if we don't get followed through, then we're still stuck in the recent range, and if we don't take out the 43.03 half area, then we're still stuck in the recent multi-day balance. And the day after FOMC is usually much more telling and much more important than Fed Day itself. And if we look at the daily chart, we can see that um, on the bigger picture, the sell side has been quite dominant, and the market just got quite overextended. We got a false breakdown and a move up to balance area high. So usually when you get a false breakdown, you tend to move up to the balance area high and sometimes through it. So, that idea has now played out. So now we need a new idea. Now we need to refresh that. So in order for the buyers to maintain or remain in control, we would need to see a proper breakout above 42.99 to 43.03 half. If that happens, then our bias clearly becomes bullish. And if it doesn't, then we're still stuck in the recent range. And in order to get a successful breakout, the market usually has to consolidate at the highs. So some consolidation at higher prices would be a good thing for buyers, because if the market just continues going up without any kind of consolidation, then it's going to get overextended and it'll be more prone to a pullback or a false breakout, right? So right now, the way the market is set up, I don't think we can really have a ton of conviction on the upside just because of today's movement. I think that we need to see follow through, and until we see that follow through and successful breakout, we need to remain flexible, because we've had situations before where you get a rally on Fed Day and the next day the market literally reverses the entire move, right? So I think tomorrow is going to be more telling than today. Now, given the big tick readings that we saw today, given the strong buying in the overnight session, pullbacks are likely to attract buyers. But I think tomorrow is really going to be the real tell as to which side is in control. And on the upside, that 42.99 to 43.03 half continues to be key resistance.